and then I will hand over to the man himself. So, Eitan, the floor is yours.
Okay, hi. Thanks for having me. So I'm Eitan Uliel. You've jumped the gun by a day and a half. I will become the chief executive of the company in 2 days from now. But since 2014, I've been the commercial director. In terms of today, what I'll try and cover is 4 basic things. Obviously, most people watching this are investors and would like to know why should they bother investing in Challenger Energy. The answer there is it's an attractive value proposition, as I hope I'll show you. The next thing is what to look out for in 2021. We've got a very active period across the portfolio. What will success look like for us over the balance of this year? And this is the core message for today. As I'll get into, there's history with this company. We were another company. We've been in the middle of corporate reset, which I'll update you on. That's the 4th point. But we, as Challenger Energy going forward, we're effectively embarking on a new path for the company. And at the core of that path is oil production and growing that oil production and growing the cash flow that comes from that. And so that really is what success will look like for us over the balance of this year and going forward. And that's what I will try and show you we're embarking on even as we speak. So starting, I guess, with the investment proposition, and the place to begin there is just an overview of the business. So as mentioned, for the last 12 years, the company was known as Bahamas Petroleum Company. And as the name Bahamas Petroleum Company would suggest, the company had one single asset, which was a group of exploration licenses offshore in the Bahamas, and it had one single purpose, which was to drill a large offshore exploration well in the Bahamas. That well was drilled earlier this year, and we can talk about that a little bit later. At the same time, in the middle of last year, we embarked on a strategic program to redefine the company, and really to redefine it as a portfolio business with projects spanning the life cycle of the E&P industry. So projects ranging from exploration through to development, appraisal, and production assets, and to diversify that both regionally and in a risk sense. And we achieved that aim, or we began the process of achieving that aim, firstly by merging with another company in the middle of last year, and that gave us a suite of production assets and development and appraisal assets in Trinidad and Tobago and Suriname, and we pick up an offshore exploration asset in Uruguay. So it was mentioned in the introduction, South Africa. That's not correct. It was South America. But really, broadly speaking, the company as it's being presented to you today is a portfolio business focused on the Caribbean and more generally on the Atlantic margin. We have assets in 4 countries. We have 13 licenses. At the core of that is we have existing production and therefore existing cash flow, as well as a clear plan, a clear route to how we're going to grow that production and grow that cash flow. And at the same time, we maintain access to exploration upside through a diverse portfolio of exploration assets, but those are now all exploration assets that we can continue to own and manage at low cost, providing low cost optionality for the future, whilst maintaining a very focused approach to growing production and growing cash flow. Any company needs to come to potential investors and explain what they have to offer, what they bring to the table. And on this slide, I've tried to summarize what we see as, if you like, the competitive edge, the unique characteristics that Challenger has to offer. The first, as I've mentioned, we already have some producing assets, and that's a reasonably valuable place. It's a good building block on which you can build the rest of the company. And we have scope to grow the production from those existing assets and from known discoveries. And I'll talk a bit more about our Saffron project, which is the flagship, is imminent. And from there, we're looking to see some very near-term material growth in production. As I've already mentioned, we also have a portfolio. We're not just one asset. We're not just one type of asset. We're a portfolio of assets development, appraisal, and growth options, and you know that we think is a valuable thing to have, a good way of spreading risk and diversifying the business. And finally, we do believe we have strong capability. So whilst we're a small company, we have a management team that's got a depth of experience in the industry. We're all very committed. Many of us have been with the company for a long time, and we have a history of getting things done. Finally, in terms of Trinidad and Tobago, which is the main center of our operations at the moment, we have a full in-country team capable of operating our business. How are we going to generate value? I mean, this is the key, and this tries to summarize it in one slide, and it starts on the left, baseline production. Our existing producing assets are generating reliably somewhere between 400 to 500 barrels a day. It's not a lot, but it does produce cash. We are earning income from it, and that's sufficient to cover our costs in Trinidad and Tobago, which is where all of that production is coming from at the moment. The next step on our route to value, and this is really where we are at the moment, is focusing on production and cash flow growth. We have a menu of opportunities as well where that growth is going to come from, and I'll take you through those shortly. But the idea there is over the course of the next 6 to 18 months, grow production, grow cash flow to a meaningful level. And then longer term, as I mentioned, we continue to retain upside linked to exploration activities. And also, you know, we're in the industry. It's an interesting industry to be part of at the moment. There are plenty of consolidation opportunities. There is, you know, the oil price is trending upwards. There is a lot of talk about energy transition. So having a seat at the table at this point in time is an interesting and quite useful place to be. So really, route to value is quite simple. We start with our baseline production. We're going to grow that. We're going to grow the cash flow that comes from that. And longer term, continue to manage our portfolio with a view to accessing upside from exploration and other opportunities that come our way. Finally, the value proposition. It's a pretty simple value equation right at the moment. We have a market cap of around £28 million. Most analysts who cover our company would say that the value of our producing assets in Trinidad and Tobago more or less covers the entire value of the company. And what that really means is that everything we do from here on in, every success we may be able to achieve from here on in represents upside. And as we'll talk about now, many of those things are not in the never. They're not things that are going to happen in 12 months, 18 months, 3 years from now. We have activity going on designed to access some of that upside, particularly through production growth over the next 3 to 6 months. So let's perhaps jump straight into then the work program that will deliver that upside. And as I mentioned earlier, our flagship is Saffron. So what is the Saffron project? It's a project located in the southwest peninsula of Trinidad. And in March of 2020, an exploration well was drilled, and that exploration well resulted in discovery in the middle and lower Cruz reservoirs. And since then, really, we've been planning to drill the Saffron 2 appraisal well. And this well is going to be drilled so as to assess field producibility. So basically, you're not out to find oil. You already know oil's there. But what you're out to do is to assess to what extent can that oil be produced. Now, we believe as a result, obviously, the risk profile is a lot less, and the reward possibility for us is very large. It's a well that will take 30 days to drill. You can see on that slide pictures live from the well site where field activity is already underway, and the outcome of Saffron will be measured in 2 ways. The first is that this well in and of itself is capable of being a producer, capable of generating cash flow and being a nice little earner for the company. So our pre-drilled P50 estimate is production of in the range of 200 to 300 barrels a day. That results in cash flow to the company of somewhere between 1.8 to 2.6 million per annum. So a nice little earner, as I said. But far more relevant is the fact that a successful Saffron-2 well will enable us to plan out the rest of the Saffron field development. And that would really come in two phases. Firstly, the balance of this year. And there we'd look to put in another 5 to 9 producing wells. The limiting factor there would really then be the speed at which we can do that, which is both capital, rig availability, and the speed at which we can get permits. But the plan would see 5 to 9 additional wells. That could take us to a production level of 1,000 to 1,500 barrels a day. And really, in a cash flow sense, we are at a point where we're looking at 8 to 12 million of cash flow per annum coming from the Saffron field. So relative to our company, that's a big deal. And then in a longer term sense, we're looking at a field that has a 15-year life that can get up to 4,000 barrels a day. And at that sort of level, you've got a field that's generating north of $20 million a year of cash flow for us. So that is material. Saffron is material. And as I say, activity is underway. It's a 30-day drill, and everyone in the company is very eagerly awaiting the results of the Saffron-2 appraisal well. It's not our only activity. And as soon as we finish with Saffron, we move straight over to Suriname, where we have the Wegnaze project. And really, in some respects, Wegnaze is a saffron miniature, saffron light. It has all the same characteristics. What we have there is we have a production sharing contract, which is over an existing oil field, where there have been 70 historic wells, there's 3D seismic, and 8 pools of oil have been identified. And so really the arrangement there is we're going to drill production wells into those pools and see to what extent we can produce them. These are not wells that will produce individually anything like the 200 to 300 barrels a day that we're looking at from Saffron, but these are also very shallow wells and therefore very cheap wells to do. And the plan of action at Wegnaze, excuse me, the plan of action at Wegnaze is that in July, we'll drill the first of these wells. That's got a budget of about $700,000. We'll put it on an extended well test and see what it does. And if that well works as we hope, we would immediately start drilling more of these wells. And ultimately, you put down lots and lots of these simple, cheap wells and you drain the field. And over time, as is the case with the Saffron project in Trinidad, this grows to be a meaningful level of production. Around 1,000 barrels a day is where we see this going and generating good cash flow for the company. So this is an immediate follow-on to what we're doing in Trinidad with Saffron. We move to Suriname and we drill the first of our Wegnaze wells. The plan there is for that to happen in July. So the only limiting factor, really, we have everything ready to go. We have environmental permits, we have all the services lined up, we have all the well design done. The only limiting factor really is COVID. So Suriname is having a pretty bad time of things with COVID at the moment. And really, we're just monitoring that situation. And as soon as COVID circumstances allow, we'd be ready to get into the drilling. And then the third area where we're going looking for production growth is our existing oil fields. There's a saying in the industry, the best place to find oil is in an oil field. And we have 5 of them in Trinidad. And so what we have there is we have a series of ongoing projects designed to do 2 things. Firstly, to stabilize the production we already have and hold it constant in that 400, 450, 500 barrel a day range. These are old oil fields. They're in natural decline. And so the task at hand is to stabilize that decline and to hold them constant. And that we've been doing a pretty good job of since we took over operating these fields middle of last year. We're doing that through intensive remediation of existing wells. We own 2 workover rigs that are pretty much in constant use. And from that stabilized base, the next step is how do we grow the production? How do we incrementally grow the production? The answer there is primarily drill more wells. So we've undertaken a project to identify infill well drilling locations. Each of these wells, again, could add 30, 40, 50 barrels a day, but do several of them and you start to make a material difference to your production levels and your cash flow. And in parallel to that, we have a number of other technical projects designed to incrementally increase production. So we're looking on one field at a CO2 injection project. We're doing an automation project, but essentially existing oil fields, existing production, and the job there is to maintain and then incrementally grow the production. So that's really the core focus of the business. On the other hand, we continue to have a portfolio of exploration assets in all of these locations: Trinidad, the Bahamas, and Uruguay. In Trinidad, we have a very large license position in the Southwest Peninsula, which is where the saffron development is. And there we have identified 9 other prospects that all have the capacity to be a saffron project. So our objective is, in a low-cost way, to mature our understanding of those. And really the idea is, through the balance of this year, to try and identify 2 of those that are capable of being drilled early next year, initial exploration wells. So basically 2 where we can do 2 more saffron 1 lookalike exploration wells. In the Bahamas, which is really the heritage of this company, as many people who follow the company in its previous incarnation would know, we drilled a large offshore oil well in January of this year, December, January of this year. Unfortunately, the well was not the commercial success we hoped for. It was a well that encountered hydrocarbons. We're proud of the fact that we were able to drill the well. We were able to do so safely, without any incident. And as I say, we encountered hydrocarbons, but not in commercial volume. What that really means is that the play is still active. There are still many prospects within the very large license area. And the data gathered from the well we've just drilled does indicate other parts of the license areas worth exploring, as well as a much deeper Jurassic play. And really, this means that someone needs to drill eventually another exploration well in the Bahamas. That may seem like a big deal to investors in the company, but really in the industry, if you think about it, many of the largest basins in the world, North Sea in the UK, for example, weren't discovered on the first well. It took many exploration wells until the basin was finally unlocked. And the same applies in the Bahamas. So the strategy for us, though, in the Bahamas going forward is that firstly, we have lodged the paperwork necessary to extend the licenses into a 3rd exploration period. And in parallel with that, we're seeking a partner. So it's time to bring in a partner on those licenses, someone with deep pockets and who'll be capable of assisting us with taking those licenses forward and ultimately drilling another exploration well. And our 3rd exploration focus is Uruguay. There, we picked up the license in the middle of last year from the government. It's a very large license. It's offshore. It's highly prospective. It has a sort of an estimated resource in excess of 1 billion barrels. But the key thing on that license is, whilst it's in an interesting address, there's a lot of interest growing in those licenses and activities in surrounding countries. The holding costs for us is very minimal. We agreed with the government that we would spend a few $100,000 a year and do some low-level technical work. So that's pretty much our exploration portfolio, all of which are things that can be maintained at low cost, progressed at our pace, and in a way where we retain some material upside from future exploration activity. And really, this slide just lays it all out in a time chart. So I guess what I've been trying to say is we have a lot of activity going on across our portfolio, and that activity is happening now. There's drilling in multiple locations through the balance of the year, and hopefully that drilling activity translates directly into value for shareholders. I guess the final point, it was asked from the last presenter, ESG. It is very important in the industry at the moment. It's very, very topical. And as a company, we've been quietly going about the business of dealing with ESG. We're actively seeking to implement it across the business. We've been ticking off a few things, and we're working on it very seriously. We expect to have a first comprehensive ESG report published during the course of this year. So I guess the next thing, just to touch on briefly before handing over for some questions, will be what we're calling the corporate reset. A lot of people watching this will be interested to know how we're going. And in the wake of the well that we drilled in the Bahamas earlier in the year, we set out a very clear program to how we're going to reposition, restructure the company and take it forward. The first part, which I've been talking about a lot already, is this shift in focus to production and cash flow growth, and that's an ongoing process. We also took a few, if you like, corporate level initiatives. We changed the name of the company, as mentioned, from Bahamas Petroleum to Challenger Energy. That took effect earlier this week. We're in the middle of what you might call a capital reset. So we have a 1-for-10 share consolidation, which was approved by shareholders on the 17th of the month and will take effect at the end of this week. There were a number of other shareholder resolutions that got passed at our EGM designed to sort of reset the capital base of the company. And alongside that, and very importantly, was a recapitalization. So earlier this week, we successfully closed a $10 million capital raising, a combination of an open offer and a placing. It was very pleasing that so many of our shareholders were supportive and so many new shareholders were interested in what we're trying to do. So those things are complete. And the final element of all of this is what you might call a transition. As I mentioned, I'm about to become the CEO. We have a few changes to our board of directors. Some of our directors have stepped down, and we have a couple of new directors joining who have a lot of expertise to offer in the direction that we're taking the company in the future. And obviously, alongside all of this, as new CEO, my job is to revisit the cost base of the company, and we're undertaking a cost reduction program across the board. So really, the corporate reset is progressing very well. We're very pleased with how things have gone so far. We have a lot of work ahead of us, but we're progressing well. And really, I guess this is where it might be worthwhile to finish. Again, to reiterate what I've been saying, we are looking to grow production, oil sales, and cash flow. And we're not looking to grow that in some nebulous way. It's coming from existing production fields and known discoveries. It does mean that we're going to need to spend money through the course of 2021, and hence the capital raising we just completed. We have various other sources of capital available to us. But the reason we're doing that is to drill wells. And the reason we're drilling wells is we're looking to build cash flow. And the potential success outcome for this company is that at the end of this year, we have an annualized cash flow in the range of $15 to $20 million. And that, relative to the size of the company and where we are at the moment, we believe is the bedrock of what will restore and generate shareholder value. So I guess that's it. I mean, I can conclude by saying, we have a simple value equation, as I mentioned at the beginning: equity value underpinned by producing assets, a clear pathway to growth, and a portfolio that we can continue to work. And with that, I might just pause at this slide and take questions.
Excellent. Thank you, Eitan. Thank you very much for the presentation. As I'm sure you'll know, not only does this sector attract some kind of very involved, very interested investors, but we, with these presentations, we often do get people that are already invested, perhaps in the company, or have looked very closely. So that's a way of saying that some of these questions are going to be quite specific, and I think are going to kind of drill down even further into some of those themes that you've mentioned there. There was a question that came through very early on about the spudding of the Saffron project, that this was expected last weekend. Is this so? For Saffron 2? We had someone who I think might be one of your shareholders asking if there's an update on that or when they might receive that. Hello. I think we might have lost Eitan. Right. What we'll do is, I think if that's the case, we'll wait, and then hopefully he'll be able to reconnect. But please do keep the questions coming through, and hopefully we'll be able to put them to him when we can. Okay, so we're just waiting to see if he can join us again. He should be with us in a minute or so. Brilliant. I can see it's on my screen. It's saying he's just coming through. So,
hi. I don't know what it is.
hi.
Every time I do one of these things with you, I seem to have I'd be cursed with technical issues, but your system literally just threw me out. So I apologize for that. Not my fault.
No problem.
I hope. I heard
Great.
you saying there was a question that came through very early on.
Yes. Okay. So
I apologize, everybody watching.
No problem here. It's a question about the spudding of Saffron 2 project. Someone was asking for an update on that.
I would. I'm somewhat limited in what I can say because we have certain reporting requirements to the government of Trinidad, and until we complete completing those right at the moment is it takes a little bit longer than normal because of COVID. But as soon as we complete that reporting process with the government of Trinidad, we should be in a position to advise the market of the status of those operations. As people will be aware, I've said on several occasions that we expected to spud the well now, a couple of days ago. And like I say, we're just completing some reporting requirements, and people who follow us should look out for an imminent announcement as soon as we wrap that up.
Excellent. I'm sure the questioner will be pleased to hear that. A couple of technical ones here. Like I say, very, very interested investors here. Someone has asked, for the production growth in Saffron, do you keep the pressure on the well by water or by gas injection?
No gas injection.
No.
Okay.
Yeah. Excellent. I'll keep powering through these technical ones here. Another investor has said that during the first Saffron drill, you encountered problems with the kind of mud. Do you envisage the same happening with Saffron 2? And how do you think this will be sorted?
No, I mean, the answer is there were problems with the first Saffron 1. I should mention that was under the previous ownership. We did do a very thorough job of taking all the learnings from Saffron 1 and applying them to the manner in which we designed and planned for Saffron 2. And in relation to that specific question, we've changed the mud system, and we've changed to an oil-based mud. So we're not expecting to have the same problems that they had with Saffron 1. But, one of the great benefits of Saffron 2 is it's being drilled in more or less the same location as Saffron 1. So we are able to take a lot of the learnings, the issues, the challenges from Saffron 1 and adapt and learn so that we can, Saffron 2, we're expecting to be a much smoother drill process.
Mm-hmm. And another question here, and I think having mistaken South America for South Africa earlier, hopefully I can get the pronunciation correct on this one. But when do you plan to spud the Wegnazi project?
Well, like I said, we would like to do the first well there in July. So Saffron 2 underway, and it's a 30-day drill, so we'll be done there sort of towards the end of June. And then we'd like to spud the first Wegnazi well in July. And like I said when I was speaking, we have everything ready to do that. And really the only thing that will hold us back is if we're actually unable to do it due to COVID. So Suriname is in a complete lockdown at the moment. They're having a very bad time of things with COVID, and we're just monitoring the situation. And as long as we can operate safely and responsibly, we'd be looking to do that in July.
Mm-hmm. Excellent. And there's a question about how some of this expansion work is going to be funded going forward. So could you just talk through the prospects for that?
Yeah, so we have cash on the balance sheet. We've just completed this $10 million raising. If the wells work as planned, as I was mentioning, they will become cash flow producing assets in their own right. So the aggregate of all of these things will give us a certain cash envelope within which we can operate, and that is sufficient to do the well in Saffron, to do the well in Suriname, to look at a couple of the infill drilling wells, as well as to complete the corporate reset that I described. We've been very clear in saying that in the case of success at Saffron and in the case of success at Wegnaze, we will need more capital. We have several sources of potential capital available to us. We're working on all of them in parallel to mature them as and when we need them. For example, it's not at all a complicated thing to secure debt finance, really, to fund the drilling of production wells when you know what kind of production you're going to get. So we have some conversations going on there. We still have a convertible note facility with a reasonable amount that has not been drawn. There are still some conditions associated with that, but that's the perfect sort of facility to use when you're drilling production wells. So I guess the short answer, it was a long answer. The short answer to the question is we will need more money. We've made no secret about that fact, but we are working on various sources for that money, to be available as and when we need it in the case of drilling success.
And in terms of your balance sheet, is it someone's asked, is it correct that the company is debt free? And does that take account of outstanding bills, which are not technically debts?
Not technically debt. If you count a convertible note as a debt, the convertible note facility that we already have, we had drawn £5 million under that facility. As part of our open offer and placing, we had agreed with the convertible note facility holder that half of that would get converted into equity alongside the placing at the same price as the placing in the open offer. So we still do have a $2.5 million convertible note position. I guess you could call that a debt. As whoever asked the question quite rightly pointed out, and again, something we've made no secret about, unfortunately, the well in the Bahamas ran over budget, as a result of which we still have quite a few bills to sort out, and we're working our way through that. I've said in the past, these are bills owed to major contractors. Those are bills that, some of the overrun on the project we feel should not be solely the responsibility of the company. And it's a process to work through all of those. And essentially what we've said is that the cash that we have, including the proceeds of the open offer, are enough to do the things that we need to do through the balance of 2021, that being settle up all of those debts. So if you want to call them debts, as well as proceed with Saffron, proceed with Wegnaze, and mature the rest of the portfolio. And then, like I was saying earlier, in the event of success, we will need to secure additional capital to drill production wells.
Mm-hmm. And with the securing of future capital, one of the questioners asked, might we see a further share placing or share dilution? They were quite keen to know basically that isn't going to happen.
Yeah, look, equity is a viable source of funding for any company, but it has to be done in a way that's accretive. And I'm well aware of the fact that many people are of the view that what we did in the course of funding Perseverance 1 was not. And that we issued a lot of shares to secure the funding we needed for that well. I guess what I'd say is if that well had been a success, nobody would be complaining about it at the moment. Unfortunately, the well was not the commercial success we'd hoped for. My job as the CEO going forward is to build shareholder value. And the default position is that we should be able to fund production drilling through other means than an equity issuance. So it's not the desire, it's not the target, but you can't. No company could ever realistically rule that out for all time. That's a part of how you fund companies if you can do so on a value accretive basis.
Mm-hmm. Yeah, and certainly one of the part of the sector. I think it's something that comes up a lot. So, Eitan, thank you so much for the presentation, but crucially as well for taking those questions at the end.